Hey everyone, and welcome. Today, we're diving into an explainer designed specifically for Zambian secondary school students, covering Module 2.0 of the Finlit Zambia curriculum, which is all about risk management and insurance. We are taking a massive step today, moving from just managing what you currently have to actively protecting your future wealth from those unexpected financial disasters that life throws at us. Here's our roadmap for today. We'll start with Malimo's costly mistake, then unpack financial risk, explore the specific types of insurance in Zambia, go over what to check before you sign, and finish up with a quick-fire quiz. All right, part 1, Marlimo's costly mistake and the true cost of being uninsured. So meet Malimo. Picture this. He saves up for 2 whole years and finally buys an 18,000 kwacha secondhand Toyota to run a small transport business. He's on the road all the time, but he decides, you know what, I'm going to skip motor insurance to save a few bucks. He literally tells himself, I'm a careful driver, it's not going to happen to me. Well, fast forward just 3 months, another driver blows through a red light, smashes into his car, causing 9,000 kwacha in damage. And then, the other driver just speeds off and completely disappears. And this right here perfectly illustrates the trap. Malima only had 4,200 kwacha in his savings, but the repair bill demanded a whopping 9,000. Because he didn't have insurance, he was forced to borrow the difference at a crushing 28% annual interest rate. It took him 18 long months just to dig himself out of that debt, instead of actually building his wealth. Literally, one unexpected afternoon completely wiped out 2 years of hard work. Moving right along to Section 2, Understanding Financial Risk and Making the Unknown Manageable. So what are we actually talking about when we say financial risk? Well, simply put, it's the possibility that something is going to cost you money right out of the blue. We're talking about pure, uncontrollable events like an accident or an illness that can only result in a loss. Now, you basically have 4 options to handle any risk in life. You can avoid it completely, you can reduce it by doing things like wearing a seatbelt, you can just accept it and take the financial hit yourself, or you can transfer it. And that is exactly what insurance is. It's transferring the risk. You pay a small, predictable premium so you don't get hit with a massive, unpredictable loss later. And hey, remember this, the goal of insurance is never actually to make a claim. The real goal is to make absolutely sure that one bad event cannot end your financial plan. Let's jump into Section 3, Zambian insurance types, looking at what's mandatory versus what's strategic. First up, let's talk about NHMIMA. That's the National Health Insurance Management Authority. If you're working in the formal sector, this one is legally mandatory. The math is pretty straightforward. 1% comes from the employee, and the employer matches that with another 1%. But keep in mind, this is calculated strictly on your basic salary only, so no allowances or overtime are included. And what do you actually get for that? It covers the principal member, your spouse, and eligible dependents for things like outpatient consultations, hospital stays, medical investigations, and emergency services. Beyond health, there are a few other key insurance products in Zambia you need to know about. First, third-party motor insurance. Under the Road Traffic Act, you absolutely must have this for any vehicle on Zambian roads. Now, comprehensive motor cover is optional, but it's a real game changer because it actually protects your own car too. Then we've got life insurance from providers like Prudential Zambia or Madison Financial Services, which pays out a lump sum to your beneficiaries if you pass away. Property and home insurance, that covers damage from fires, floods, or break-ins. And finally, funeral cover. Starting from as little as 30 to 50 kwacha a month, this is a massively important cultural safety net, especially considering how expensive funerals can get in Zambia. All right, part 4, before you sign, the 4 golden questions. Okay, before you ever sign on the dotted line for a policy, you have to empower yourself by asking these 4 questions. Number 1, what is the premium? Meaning, what's my regular payment? Number 2, what is the excess or deductible? Number 3, exactly what is excluded from this coverage? And number 4, is this insurer officially licensed by the Pensions and Insurance Authority of Zambia? Never ever skip those steps. And that brings us to Section 5, our quick-fire quiz to test your knowledge. I'm going to fire off 5 questions, pause for a second so you can lock in your answer, and then reveal the correct choice. Let's do this. Question 1, what is the NHIMA contribution rate? Think back to that table. Got it? It's 1% from the employee and 1% from the employer, calculated strictly on your basic salary only. All right, question 2. Which type of motor vehicle insurance is legally required in Zambia? Remember Malimo's story?
The answer is third-party insurance, which is a legal must because it protects other people's property and health if you cause an accident.
Moving on, question 3. What exactly is an insurance excess or deductible? It's the initial amount you have to pay out of your own pocket first, before the insurance company steps in to cover the rest of your claim. Question 4. Which Zambian authority licenses and regulates insurance providers? Hint, it's a 3-letter acronym. That would be the Pensions and Insurance Authority, widely known as the PIA. And finally, question 5. What is the core difference between transferring a risk and accepting a risk? Transferring means you're paying an insurer to take on the loss, while accepting means you bear the full, often devastating cost entirely by yourself if the event occurs. You guys did fantastic. As we wrap up this explainer on Module 2.0, I really want to leave you with this one thought to chew on. If the true goal of insurance is to make sure one single bad event cannot destroy your entire financial plan, can you honestly afford to go unprotected? Think about it. Protect what you build, and I'll catch you next time.